All right, my name is Jacob Faust, and this is my mutual fund breakdown. It's gonna be a little 5-minute analysis on some mutual funds. Our objective for this analysis is to analyze a total of 6 mutual funds from 3 different categories, looking at a fund I would buy and a fund I would not from each category, looking at different key factors for each set of funds. Now, it's not necessarily meaning that I wouldn't buy the fund I'm comparing to. My main focus on this presentation is to show you the difference in some key factors that we're going to look at on each fund, what I would look at to buy. So we're going to see funds that may be similar, but there's going to be one key difference between them is going to show why I would not buy that fund. So these key factors we're going to look at is going to be the volatility measures with a concentration on beta and beta's relationship to the market. And we're also going to look at diversification of a fund. That's that's the whole point of buying mutual funds, really, to me, is to be more well diversified. So that's a big key to me in funds. We're also going to look at a fund's turnover rate, and we're going to look briefly into the management of a fund. I'm not going to touch on it too much because it doesn't really, some people it doesn't matter to, but I have a good example of management in a fund coming up. And our first set of funds we're going to look at is going to be the sector fund set. We're going to look at the Fidelity Select Technology and Devices portfolio versus the Fidelity Real Estate and Investment portfolio. So let's go to those portfolios now. Okay, so here we have our 2 portfolios. We have our Medical Technology and Devices portfolio and Real Estate and Investment portfolio. And on these, I'm gonna focus on the turnover rate of a fund. Okay, so that means a lower turnover rate means less buying and selling of stocks throughout the year. So my perspective, I like a lower turnover rate. So we can see the Select Medical and Technologies portfolio has a 77% turnover rate we can see here versus the Real Estate Investment portfolio, which only has an 11% turnover rate. So that right there, and you can also see that these 2 firms are very the same and everything else. The overall rating, this firm has a little bit better. But to me, I like a lower turnover rate. I like something that's steady. And another thing I wanted to touch on here is the management. So this manager's been here since 2007. It's a fairly new manager, and it's got a higher turnover rate. Now, if we come here, this manager here has been here since 1998. And a low turnover rate, I really like this firm more because to me, it just seems steady. It seems like they're not doing a whole lot of buying and selling. They've had the same manager for a long time, almost since the fund was created. You see, it was created in 86. This manager came on in 98. So this fund's been steadily growing. I like the way this fund looks based on that turnover rate. Now, I wanted to say we're going to touch on key factors of each firm, and this is my key factor here, the turnover rate. So we're going 77% versus 11. I like a lower turnover rate. I like this manager's been here longer, and that is why I would pick this fund over that one in the sector funds. Now we're going to move to looking at our international fund set. We got the Fidelity International Small Cap Fund versus the Matthews Emerging Asia Investor Class Fund. So let's move on over those funds, check those out. So on these funds, we're going to be looking at the volatility measures. So with a focus on the beta ratio. So a beta greater than 1 means that volatility moves with the market, and less than 1 means less volatility than the market. Measures sensitivity with respect to the market is what beta is. So we're going to scroll down here and look at beta 4. Okay, so here we got our volatility measures, and then with this fund here. Okay, so you can see the difference in beta here. This is a lower beta. This beta is close to 1. So I'm gonna go with the Matthews fund in this aspect of measure because I like a lower beta, less volatility. I'm all about consistency and steadiness over time. So I'm definitely going to go with this fund with the beta being as low as it is and this beta being much higher. So, and again, with that, we're comparing the Fidelity International Small Cap Fund and the Matthews Emerging Asia Fund Investor Class. So that is it for our international funds. And now we are going to take a look at our domestic fund set. So we're going to be comparing the Fidelity NASDAQ Composite Index Fund versus the Fidelity Blue Chip Growth Fund. And with these funds, we're going to take a real a look into the diversification of the fund. This is my biggest point on these funds is diversification. Okay, so here, taking a look at these funds, this is the PDFs generated by Fidelity. I'll pull all this information from Fidelity. And again, we're going to take a look at the diversification of these funds. So here is, you can see, you got 38.72% of their holdings takes up their top 10, and 33.99, so 34% here. So they look very similar to the eye here, and you can see that their trends are the same, very similar funds, but I like the you can see here that we have 454 holdings in the Fidelity Blue Chip Growth Fund, and we have 2,024 holdings in the NASDAQ Composite Index Fund. And to me, I like that diversification. But although these funds are similar, I like the diversification of the NASDAQ Composite Fund way more than the Blue Chip Fund, because it kind of has that safety net. If something happens one, it may not happen to the other, because it has that much larger aspects of holdings. So, and again, that touches on the diversification. This is a way more diversified fund than this one. Although they may do the same, this is a much safer fund to me to go with. If I'm going to put my money somewhere, I'm definitely going to go with this Composite Index Fund over this Blue Chip Growth Fund. So that's all I have for this presentation. Hope you enjoyed it. Thanks.